All right, guys. Thanks for being here. I'm here with Emily Richarde, the operations manager for Santana Properties team, and Derrick, which is the director of marketing for Santana Properties team as well. And I'm Hudson Santana. We're going to give you a little update on what's going on with the real estate market in Cambridge, Somerville, Arlington, and Medford. So, Emily, let's start with the slides, please.
All right, so this is our first slide. You can see we're tracking the active listings in these 5 towns, and we're comparing 2019 to 2020 based on weeks. So we're moving up week by week because we wanted to get a close look at this year and then also compare it to last year.
Okay, yeah. The interesting thing about this slide is that if you see the biggest gap, it's in Somerville. So you see the January, from first week of January to right about first week of March, where there's a pretty big gap, right? Well, one thing to note is that in 2018, the inventory levels were way higher than the prior years. So I think the only reason why we see just Somerville sticking out is because last year it just happened to be a year where Somerville had a pretty big spike in inventory.
Yeah.
Portion of that was that there were a few large condo buildings that went up for sale with multiple units. So, but overall, you can see all the other markets are kind of trending similarly.
Yeah, it's interesting how there definitely is a difference in the 2 years, but they're pretty close to each other. You can see the different colors are close to each other. All right, and this is the same thing, but just with closings year to date instead of with active listings.
Yeah. So what this is showing us is that, basically all the closings we've had so far, which this graphic is always going to go up, right? Because the more closings we have, it keeps trending up. There is, again, what we mentioned before about the amount of inventory we had in Somerville, we can see that we had a lot more closings at this time in Somerville than last year than what we had this year. But most of the other towns are trending very closely. We see Medford in yellow, which I feel like that's the only one that has a pretty decent gap. But overall, I think they're still trending pretty regularly. There's not much of an impact. In my opinion, where we're really going to see the impact is between June and July, because the virus became in effect, the shutdown was about second week of March. And again, in real estate, we always have a 45 to 90-day delay in like the results. So,
yeah. All right, so this is just specifically zeroing in on Arlington. And this graph, I mean, you can see that we're trending very similar to 2019, keeping pace with it. And then the active listings, it's still pretty close and even passed it this week compared to last year. So Arlington is pretty steady.
Yeah. Yeah, the one thing about Arlington is that it's a market that's known for a very limited amount of inventory.
Yeah.
I mean, it is a market that, especially for investors, that I strongly recommend investors going into, because there's such a limited amount of inventory ever available. And clearly, I mean, that's why we're not seeing that much of a difference as far as, last year. It looks like right at the last week we saw a bigger drop on the active listings, right? So last year we had 29. We actually see more listings now. The one thing for you guys to understand about this graph in regards to Arlington is this big difference here is in multifamilies. Last year, during this time, I believe we had about 0 properties listed on the market as multifamilies. This right now we have 4. And again, between 20 and 29, 4 is a big percentage, right? It's still such a limited amount, but what's happening is investors are not being able to get financing for new projects, which is showing that a lot of these properties that before would go off the market in the first weekend, they're staying longer, or they're actually coming back on the market because investors don't have the ability to finance. A lot of the commercial local lenders are holding off. They either not lending at all, or they're increasing their down payment requirements. And most of the hard money lenders are not lending. They're basically on pause because they want to understand what's going on in the market. I think that's where we're seeing the difference in inventory, like increasing in Arlington.
And it could be a good opportunity for new investors to make it into the Arlington market where they wouldn't be able to before, because there are multifamilies actually available.
Absolutely. And again, the fact that it's such a limited inventory, even when you look back 10, 12 years, the indication is the market's still going to be very strong because, I mean, again, think about it. There's 29 houses available. That includes condos, single families, and multifamilies, right? There's definitely more than 29 families looking to buy houses in Arlington, right?
Right. And the last 2 weeks we had 2 new listings in Arlington, and they were both off the market in the first week.
Exactly. As a matter of fact, one of them we had a full price offer on the first day that went on the market. The other one we had a full price offer, actually a asking offer the following day once it went on the market. So it shows. But one thing to be noted is that that listing had absolutely no competition. It was the only renovated property in East Arlington with 4 bedrooms. So again, East Arlington, especially, which is where we do most of our business. I mean, it's just, I think it's a great opportunity for investors to jump in, because if you are capitalized, if you have the opportunity to get financing or to fund the deal yourself.
All right, so let's now take a look at Cambridge. We can see, again, with closings that 2019 was passing us, but we've been able to catch almost exactly back up to it just this week in closings. And then you can see here the number of active listings was pretty similar throughout the beginning of the year, but then once we see the pandemic hit right about here, it starts to drop for this year. And this is also around the same time when it started to increase last year. And we see that in quite a few of these towns, that around the second, third week of March, we see an increase. And that happens most years because more people start putting things on the market in the spring.
Yeah, the one thing interesting about this graph, and I think we'll see with all the markets, is that, you know, that second week in March is when, you know, the state declared the shutdown, right, of businesses, especially Cambridge. Cambridge deemed at the time, you know, the construction is not an essential business. So if you look at that week, you're seeing basically what happens is a lot of realtors and families and investors decided to pull off their listings, right? Because they didn't know what was going to happen. So their immediate reaction is like, let's take it off. Let's see what happens. And now, after 2 weeks, you start seeing a trend where they were to go back up. And the main reason for that, in my opinion, is that the industry now is essential according to the governor. So like we're allowed to work, but also I feel like people already allow that information to sink in, right? It's like, okay, you know, it is what it is. I still need to sell my house, or I still need to buy a house. So we're seeing a lot of people now decide to put their houses back on the market. Plus, you know, as an example, we now implemented 3D tours, virtual consultations, virtual walkthroughs, virtual open houses, right? So like we're able to adapt. So did all the realtors, as far as like being able to service the industry as needed right now.
Yeah, and so we expect to see in all of these towns this sort of curve to begin to go back up.
Yes.
All right, so here is Medford. And again, you can see the increase here and the decrease here. Now, Medford is a bit of a different situation. Hudson, I don't know if you want to speak to that.
Yeah. So Medford is interesting, right? So you look at right in the second week of April where things starting to level off. What does the mayor of Medford do? And he declared that real no in how do you describe it? No showings are allowed. So basically, you're not allowed to walk in somebody else's house to show a house.
Mm-hmm.
And again, I'm not criticizing his decision. I'm just stating the fact that that had a direct impact on the real estate market. Why? Because if I have my property on the market and all of a sudden showings are absolutely not allowed to happen, I'm going to pull that off the market, right? Because how can I sell my house if I cannot show it, right? So the most realtors, that was the, in families, that was the immediate reaction. Um, we actually had a great experience. One of our listings, I believe it's Hillsdale, we were able to list that week, and we're actually able to have our first property go completely under agreement, all virtually, which it was great, but it's not something that's going to happen every single time, right? So I think it's natural to see that even though people are getting used to the idea, once that became effective, the market dropped, right? And it might stay low for the next few weeks. So we'll see.
All right, Somerville. I mean, Somerville is, like Hudson says, definitely the most interesting with the beginning of last year starting out really strong and then about a lull and it ticked up again. But we can still see here, we've got an increase. Somerville didn't have as harsh of a drop as we saw in some of the other towns, which is definitely promising. And for the closings, I thought it was interesting that we started out the year very strong. We were actually passing 2019, which is, just to show that the Somerville market is very strong, even though there were less listings than in the year before. There were more closings. But now we're seeing a little bit lower than 2019.
Yeah. And again, the active listings, it's what we talked about last year in Somerville. It was and again, I want to say an abnormal year, but mainly because of if we track the last 3 or 4 years, okay? It's more like the inventory has been so low lately, and last year we saw a huge spike. It just happened to be because of a lot of projects, a lot of new units became available at the same time, right? So one other thing to keep in mind is what happened in Somerville last year. Well, they had brand new zoning law go in place.
Mm-hmm. Yeah.
There's also the condo conversion ordinance that went in place, which prevents developers from converting properties into condos. And maybe preventing is not the right word. Now it's a process that takes at least a year, a minimum of a year, right? So what ended up happening is, since the beginning of last year, a lot of developers became skeptical of investing in Somerville. And most of these smaller projects, they take between 6 to 12 months to become, ready to be sold. So we're already seeing a drop of inventory. So if you look at January 1st, even before coronavirus, we already had a much lower inventory, right? That had to do with the zoning and the condo ordinance. Even just to be clear, I know the condo ordinance and the new zoning only came to place in the mid to end of last year, but most of the investors were already preparing and scaling back and looking for different towns to invest in. Now, what does that mean for a regular home seller or home buyer? It means that with lack of inventory, I believe that demand, at least for the next few years, is still going to stay strong. So there's a good chance of appreciation in home values because of that. And then you go in and you see that things are catching up, and then, coronavirus happened, and then we're starting to see a drop in inventory again. So.
Mm-hmm. All right. Last but not least, let's look at Watertown. Watertown definitely had the most, steady pace with last year in terms of closings. It's pretty much, the same, just off by a few numbers. And at the beginning of the year was pretty steady in terms of inventory. And then we see this big spike here in the number of active listings in 2019. And just like we saw in the other towns, about mid-March, we're seeing a dip. That does look like we said before with Cambridge, it does look like it's starting to trend upward, which is promising.
Yes. Yeah. Again, Watertown is again another town that has very limited inventory, so it's a very strong market overall. But again, that one we can see the huge impact of the COVID-19. But now we're already seeing an upswing of new listings, which is good. Derrick, is there anything you're noticing as far as the new buyers or consumers, whether they're showing up or looks like they're taking a pause? What are your thoughts?
I mean, since all of this has happened, our traffic on our website and general interest in our social media campaigns have all went up quite a bit. So there are a lot of buyers that are still looking, maybe not as serious as before, but definitely still looking and definitely reaching out to us.
All right, so here it is.
Awesome.
So we're comparing, again, 2019 to current year-to-date data for both Miami and for those 5 towns in Boston.
So thank you for sharing that. What I wanted people to see is that when we're looking at, again, our area in Arlington, Cambridge, Medford, and Somerville, look how interesting it is. The inventory is down almost 30%, right?
Yeah.
So real impact that's happening. Days on the market is down 8%, right? So now we're down to 23 days on the market on average. Now look at the prices, right? Inventory is down, days on the market is down. What's happening to prices? Prices are going up. Prices are up about 9%. That's a real impact on prices. So, and what we have seen is we're still experiencing multiple offers. We're still experiencing, the buyers that are out there, they are motivated. They are buying because they need to buy for some reason, right? We're not seeing as many of the looky-loos in a sense, but for the home sellers, it's encouraging because we do have very strong buyers out there. Again, because the inventory is super low. We lost about 30% of our inventory. So
even just compared to Miami, you can see the big difference.
Exactly. I mean, and one last thing is the sold properties are down about 10%, right? So again, just there's not as many houses for sale. Our team services the Miami market as well. So we have a comparison here. So in Miami, the inventory is down about 22%. And just to clarify, we're talking about Coconut Grove, Coral Gables, and South Miami, because that's the majority of the areas that we service, even though we service Miami Beach and some other towns as well. But look how interesting. Inventory is down 22%, similar, right? Days on the market is up 31%. What is that telling us, right? It's telling us that, even though there's less inventory, there's not as much interest, right? People are not as motivated to pull the trigger. Now, average sale price is down 10% compared to last year. That's very interesting. And the sold properties are down, so there's 5% less than they sold last year. But look of the difference between the markets, right? We see the South Florida market where it's a lot of second homes, a lot of vacation homes, as well as primary residence, but not as much of, college and business and strong, not as strong as a job market, right? So we're seeing, even though there's less inventory, what's happening is the days on the market are increasing, the price is going down, which means people are just not as motivated to buy, right? Where in Boston, even though the inventory is down, the prices are going up and properties are selling faster. So any final thoughts, Emily or Derrick, on this?
No, I mean, I just find it so interesting to watch how it's trending and to see just week by week how steadily we're growing. It's very promising.
Yeah, and again, I appreciate your time. Thank you, Emily, for putting this together as usual. Derrick, thank you so much for your hard work and your insight on the market. And guys, for you that is watching this video, I appreciate you being here, and feel free to reach out to us. We're happy to serve you. And one thing about our team is that we're working full time. We made a commitment to our staff. Everybody's, we didn't let anybody go. We didn't lay anybody off. We didn't reduce anybody's hours. We're really committed to our people and to our clients. So we're still working, and we appreciate any referrals and any opportunities that you guys have for us. Have a great week, and we'll talk to you next week. Bye.
Bye.